All right, welcome back. As promised, let's get you a quick update on what's happening in the market. Looking very good and building onto its gains now. The Nifty is up 130 odd points. Vikas Khemani of Carnelian Capital is joining in to debate what's been transpiring so far. Vikas, this is what the longest losing streak we've seen in a while. I mean, 8 straight days of losses and now finally some relief. What's the sense you're getting? Do you think this is a year where equity market returns may not be too great and there are better opportunities in other asset classes like fixed income? Do you raise cash levels now? What's the best way to approach the markets?
I think clearly right now mood seems to be pretty much somber, and view is that there's no immediate trigger in the market, so why should you sort of take an exposure? And my view is slightly different. If you see last year, we had sharp rise in inflation, sharp rise in interest rates, and strength in dollar, and all of them were negative, for the markets in general, and we saw impact of that playing out throughout this year. And all these three things have, in my opinion, peaked out, and reversal in some sense has started or will start. So, and market, we know that tends to reflect things in advance. So when these things were going up, the impact of that on demand happens with a lag, and which is what we are seeing. And same thing, I think, in my opinion, will happen probably 6 months down the line or the other way around. And as far as the markets are concerned, if you ask me, the best time to deploy money in the capital market is when there's a one-sided negative view on the market, and which is what is right now, sort of, in my opinion, market is by and large, you can characterize the mood of the market that, one way, there's no trigger, why to invest, hardly any return to become by. But my point is that when macros change or reverse, they tend to again impact with the lag, and market tends to factor in advance. So my sense is that the second half of this year will be far better than the first half. But net, I think this year will be better. There's no, in my opinion, my expectation is that second half of this year will be better. And now, as these macros start turning, you will see markets kind of doing well. Corporate earnings have been reasonably all right. I think banking sector is holding on, IT is holding on, capital goods are holding on, telecom is holding on. Consumer might be mixed bag. Metals, I think, in my opinion, of course, is a high base, but should not be very bad either. So, I don't think there's a major risk on the earnings side. Even if you make 13-14% earnings growth, at least there's a case for that much return, right? And markets tend to surprise. So I think, there's a structural good place in the market. When markets are kind of sold off, people are, and by the way, Adani kind of incident happened, which is a very serious incident. Market showed its resilience and bounced back from the lows. That also tells you the underlying strength of the market. So market might correct from a time correction perspective. We are kind of in narrow range, but I personally think that second half could throw a lot of surprise, or maybe even earlier. Who knows?
Vikas, hi, good morning. So I just had a specific question on banks and how you would approach the sector for the rest of this year. Today we're talking about Axis finally completing the Citi acquisition. So it's an interesting day. But in terms of strategy, are you looking to play a lot of these big private sector names with large retail franchise, or would you look at big lenders like an SBI, and you would rather look at the capex cycle and look at their industrial exposure? And is that the way to go?
So I think we are in favor of large banks with good balance sheet, good customer franchise, and a reasonably good technology platform available. And I think most of the large players, whether it's ICICI Bank, Axis Bank, or State Bank of India, all of them are well placed in that. So I think all of them, in my opinion, will do well. They have a good liability franchise. The growth is coming by across the sector, both corporate and retail. Last 3-4 quarterly numbers are very much visible to you. Margins are holding on. I think there might be a case of bit of a worry when interest rates come down, but I think that's at least 6 to 8 months away, and things happen with a lag. So I think earnings next 2-3 quarters should not be a problem at all. And as numbers come by, I think markets will get a little bit comfort. So I think banks should do well according to banks should probably lead the market.
Okay, that is on banks. Vikas, thanks a lot for joining us. Quickly, if we can get your take on the auto pack as well. I mean, there's very mixed news, right, when it comes to autos. On one hand, you have M&M, which is doing very well for, say, its SUV volumes. But then you have news of Bajaj, which is still under pressure pretty much because of what's happening on the export front. Would you play this pack? And if yes, and what do you like within the space?
You do play, because I think auto cycle has come out of a long consolidation, and again, there are company-specific models and issues, right? Bajaj is more export-driven issue. I think Mahindra is more than one is number, and secondly also corporate restructuring is also another issue. Positive which is working for them. So net we are positive on the auto cycle. We've been playing through M&M, we've been playing through Eicher Motors. We used to have Bajaj Auto, which we sold off. So we've been playing through some of these names. We have Maruti in our portfolio. So I think auto pack should do well. There's a pent-up demand. Commodity prices coming down also kind of helps them. So I think reasonably we think the sector should do well.
Okay, Vikas, always great speaking to you. Thanks a lot for joining in and have a great one. That's Vikas Khemani of Carnelian Capital. Interesting, he's saying that the best time to buy in this market is when everyone's fearful, and that's right about now. So good time to deploy some money. Let's slip into a quick break. When we return, we'll put the spotlight on the banking sector and our special segment